Happy New Year, dear friends. After a year-end move, the market is asking a simple question. Is it the start of a fresh leg or just a pause before the next decision point? Instead of guessing, let's do one thing today. Let price lead and let options confirm. Hi, this is Kamal. In this analysis, there are no guesses or predictions. I am simply reading what futures and options data are showing us for Nifty and Sensex. Now, let us begin our analysis with Nifty. Let's begin with price action because price is always the final authority. Nifty is currently trading around the 26,350 zone, and this area has now become a clear decision zone for the index. Nifty has reached an exhaustion stage or end stage for this week, which is set to expire on 6th of January. Now, what matters is not where Nifty came from, but how price behaves above and below this level. With that context, let us now see whether options data supports or contradicts this price structure. Starting with put open interest, we can clearly see heavy put OI buildup between 26,000 and 26,300. This tells us very clearly that market participants are defending the downside aggressively in this zone. In simple terms, below 26,300, put writers are active, which means the downside is being protected for now. Now let's check the change in the put open interest, which shows fresh activity. The strongest addition in puts is again below the ATM, especially near 26,200 and 26,300. This confirms that the support is not old. Fresh put writing is coming in. From a downside perspective, price action and options data are well aligned. Now let us look at the other side, that is calls. Call open interest is clearly visible between 26,500 and 26,700, and this zone acts as the immediate overhead supply. So while the downside looks protected, the upside remains capped unless price decisively crosses the call wall. Change in call open interest gives us the final clue. We see some call unwinding near the ATM, but fresh call writing is clearly visible above 26,500. This tells us something important. The market is not chasing prices aggressively, but it is comfortable selling higher levels. Now, let us add seasonalities, but only as context and not as a trading signal. Over the last 16 years, January has delivered a negative average return of about 0.1%. Only 5 out of those 16 years were positive, giving January a win rate of roughly 31%. So, statistically, January is not a strong trending month. The Sensex is also behaving in similar manner to Nifty with respect to open interest, change in open interest, and price action. For Sensex, the exhaustion price lies between 86,000 and 86,120 for this week. So let us summarize this week logically. Price is holding above a strong support zone, but it has entered a exhaustion phase for the week. Put writers are active on the downside, while call writers are defending higher levels. This tells us the market is balanced, not weak. Historically, January delivers negative returns on average, so the approach should be cautious rather than euphoric. So watch the price carefully. Until then, price leads, options confirm, and patience pays. Thanks for watching. Trade what you see, not what you feel.